Recording.
Hi, everyone. Welcome back to another week of Swings and Bullish Setups by Black Ink Economics. This week, I'm going to be doing the newsletter first 5 picks. If you want to see all 10, you have to subscribe to the newsletter. And if you want to subscribe to the newsletter and alerts, I have a deal right here. I even did this. It's mirrored. I had to spell this backwards and upside down or something crazy to get it to work. But that is the code to get newsletter and alerts for $50 on the website instead of $80. That's all my entries and exits, plus access to the newsletter online, which is all 10 picks every single week. Been doing it for 6 years. Didn't miss a week, even when we had our first child and second. Marissa hated me for it, but I was in the hospital with my computer. It was 2 hours. I still was there for the baby's birth, guys. Come on. All right. So this week, let's get into the newsletter. I'm going to share my screen. And we're going to do it here. Start broadcast. I'm going to try to do it sideways here. I think that helps. All right, so here we are. In case you want to do that deal on the alerts and newsletter, you go to products, just push the products button, and then it's down here, alerts and newsletter. And that code from earlier will make it 50. Let's get in the newsletter here. All right, and we're not in December 5th. We are in December 12th. All right, week of December 12th. Last week's newsletter was a little slow. I'm still on quite a few of them. Definitely POETs is one of my favorite that I'm still in from last week. And AGBA started to take off. It would jump, but then kind of fall back down. It's coming around. I think a lot of people who do weekend research are going to see the charts and start to move over there. All right, so this week, we had some pretty big ones in the alert group and in both Discord and the alert group and off the scanners. The scanners were on fire. I couldn't keep up with them. But if you were looking at the scanners, HTGM ran about 200 and some percent. AMAM ran off the scanner. It was on runner in under 9 days on the 29th. And that's 9 trading days. So the weekend takes 2 off. And it ran literally 7 days later. It was 1,000%. Not 1,000% from when the scanner hit it. Something like 800 and some percent. I'll show you at the bottom. And we had quite a few that were running off the knife catcher scanner. That knife catcher scanner last week was absolutely on fire. I forgot to actually use it in the recap that I'm going to show you at the bottom. The knife catcher scanner, I'm going to start playing basically every single one that shows up on it. The only one that didn't go 10% or more was iBio. And if you set your stop loss, you would have been fine. Everything else off that knife catcher scanner went pretty big. And it's just trying to catch the ones that tanked for a reason. You have to go find out what the news was. But then the technicals are shifting back up and there's kind of some buying pressure as if maybe it was an overreaction. And now it comes a little bit of an overcorrection. This coming week, you guys, is going to be interesting. Hypothetically, these 2 catalysts that we're going to be looking at are both bearish catalysts. The Fed with their interest rate and then quad witching. Quad witching is really bad, usually because it's a whole bunch of expiring options and futures contracts. And when something's expiring, they're going to try to sell them, right? If it's in the money, and when they sell, they'll try to exercise and then sell those shares. And it can create a whole bunch of selling pressure and sideways action, or it can even lead to some pretty bearish action. Over the last 2 years, every quad witching has been pretty unique, but for the general sense, they are headwind. They are a little bit of a brick wall on progress. And then the interest rate decision is going to be crazy because right now it's widely expected it's going to be a 0.5% interest rate increase. But last week with the PPI came out, everyone started talking about 0.75 might have to be it. But then after the PPI came out and traders had a chance to kind of digest the information, market went up. So I'm leaning towards it's going to be 0.5. If it is 0.5, I would expect bullish action after that. If it's 0.75, I would expect that to kind of hurt the markets. But then Powell's going to speak after that. And if he does 0.5, my guess is his speech is going to lean towards, hey, don't forget I can do 0.75 if I want to next time. And if he does 0.75, he's going to lean towards, hey, don't forget, this really helps the chances of us doing 0.5 next time. So he's going to try to combat the reaction of the market based on the interest rate choice with his comments after. And that's his job, but it's worth listening to and people will react to it. I added SPY puts on Friday before market close, and I'm planning on selling them for a profit. I mean, if I get a chance to sell them Monday morning, that's great. But I'd like to get out of them before the interest rate decision, I believe. I took Friday's expiration date, so I have a little bit of time. Nat gas is going to be a fun one too. It's getting freezing over here in the Midwest and central US, and the storm is supposed to start heading east, right? But this Greenland block or whatever that's going on apparently isn't having the effect that it was predicted, which was supposed to mean a lot of cold weather for the East Coast. It kind of gets stuck in there. So it doesn't look like, based on weather forecasts, that you guys are going to get cold out in the East. If you guys do get cold, that's when nat gas becomes something to look at. And especially if we can get ahead of the forecast. Like if all of a sudden this storm that hits the central US were to shift course or something and head out towards DC and New York City, if we saw that ahead of time in some great weatherman's forecast or something like that, it might be something to play on. Otherwise, I would expect natural gas to actually have some bearish pressure until inventory. And then inventory would be the real data that shocks it back to whatever. It's really hit or miss. Natural gas, as you saw on Monday, probably it tanked at open because the 2 days of selling pressure all accumulated on Monday's morning open. And it would have been great for puts. And then coming up in the inventory, it was like, Friday it went up 5%. UNG went up 5%, excuse me, just based on the inventory coming down and this incoming storm. But if this incoming storm doesn't hit the population centers, it really doesn't matter. And that's what's happened with a lot of natural gas price speculation, is people speculate on this cold weather going all the way east. It doesn't hit New York City to DC, and therefore it doesn't really hurt inventory as much as it could have. So that's really the place we wanted to go, is New York City to DC. Sorry to you guys. I do want you to be cold just for a little bit when we're playing natural gas. It's freezing here in Colorado. I don't want you to do that, but something. And then someone requested that we put up the top 5 of the last week. I'll see if I can fit more next week, but these were the big ones from the Discord, which is free, the alert group, which is the private alert group you can subscribe to, or the scanners, which are all subscription. But I also post a ton of scanner hits on the Discord group. It's a lot of fun. So these were kind of the ones that I thought of. If I had thought of that knife catcher scanner when I was doing this, knife catcher caught some ones that would have tossed Goss and STSA off. But Goss and STSA are really interesting because they're still kind of in play. Goss is kind of pushing it, but if it were to fall again, that'd be great. STSA is still right there. Every time it's gotten to 92, 94 cents, it's fallen right back down. And it's really like, it's one of those that's just itching to go bigger than just that typical 20, 30% that we like to look for. All right, so let's get into the newsletter. First one on my list is Lucid Group. I like to look for EV plays pretty much every weekend. I'm looking for some kind of EV play that might be in favor, and Tesla is gone. We got Tesla calls at the end of the week last week, and it's not gone. It's actually quite playable. It barely moved, in the comments, but the calls gave us about 100%, 85%. But having said that, all the Chinese ones, XPeng, XPEV, XPEV, NIO, they're really starting to move. And that's partially EV, and that's partially China reopening. But looking at Lucid Group, it's been selling off. And it's starting to show those reversal signals that we like to see: PBS scalper, CTM trend. Matter of fact, all the signals are in the more bullish side. The neutral ones, VWAP to weighted moving average. It's really, right now, the weighted moving average is resistance. That's that blue line. The price tries to get past the blue line. The blue line bats it back down, but the blue line is $1.40 from here. So from an option standpoint, that's playable in my opinion. And that's probably what I'm going to be looking at. With all the technicals where they are, I put it as strong bullish. Of course, pay attention to the initial stop loss idea. The way I do that is I put on price alarms instead of actually setting a stop loss. I put a price alarm on, let my phone ding at me if the price is hit, and then I do it manually if I want to, or I reassess. The reason I do that is to hide from the L2. If you put a stop loss up with LCID, it might not matter. But if you put a stop loss up, what you're doing is showing the world, including market makers, where you're willing to sell and where you're going to sell. But if you can hide that from the L2, which is where you're posting it, that really helps. So the price alarm works really well for that. The other thing you can do is just don't use a limit order of any kind, and it'll hide from the L2 like an OCO. Trailing stops are supposed to hide because it hides until, so the trailing stop is weird because a lot of people say, no, it doesn't hide. The trailing stop hides until it hits that trail that you set. And then when it hits the trail you set, the first thing that happens is it gets put on the L2 as a limit order. And then the second thing that happens is it executes. And hypothetically, it's supposed to happen instantaneously, one after the other. If that doesn't happen, then yeah, it shows up in the L2 and you're out. You know, if it jumps to your stop loss or there's not enough shares available there and it keeps going, your stop loss sticks. You know, it's not going lower unless you come in and mess with it. So if it jumps it, then you are in trouble there, and that's something to consider. But anyways, I digress. I use the price alarms. So LCID, I'll be looking at options plays with that one. All right, NM. NM wasn't on any scanner this week, but shippers have been getting pretty hot. And what happens with shippers when they get hot is they do offerings, you know, TOPS, case in point. They're all using that same kind of strategy. But NM here has been selling off now for quite some time. And since the 16th of last month of November, and in the last week from Monday to Friday, it's fallen a good 30 cents with skyrocketing accumulation distribution. That accumulation distribution right here is signaling that drop right there. Market makers were buying it. Market makers are allowed to be wrong, right? They are compensated for their losses, but they get to keep their profits if they're right. And my guess is if you work for a market maker, you want to be right. So, you know, I like to see that signal. It's not like it's a guaranteed anything signal, but it does show you that I would call them smarter traders than I were buying up that dip. They're smarter, but they also, you know, they're the ones, some people might use the word manipulating the market. Some people might use the words managing the market, right? Whatever they're doing, you know, if they're starting to scoop up dips, that's something that I keep my eye on. So the other thing is the technicals are pretty spread. There's a lot of neutral ones. The neutral ones are the VWAP, WMA. It's neutral because the price is below the WMA. It's the resistance at this point, but the resistance is 30% away, 15% away. So it's not, you know, it's got a play on it. And then if it were to get above that, then we got a pretty good spike. If I were to be playing NM this week, you know, I'd probably want to see, I'd like to see the TTM shift blue, but if I can't wait that long, at least the Williams can just pop back over -50. I'm pretty sure at this point, the Williams is over -50 on the 15-minute and 30-minute technical charts. So we're just waiting for it to come through on the 1 hour. If it doesn't happen Monday morning, let it trickle down and see if you can't get it a little cheaper. And also, you know, maybe avoid this one because it's a shipper, and shippers come with a whole lot of inherent risk. PHIO, PHIO. So this was on textbook swings or the RU9, or it could have been both, honestly. Textbook swings catches a lot until this week, by the way. If you're on textbook swings, it's going to catch a lot less now because I've turned off one of the feeders. But anyways, the RU9 and textbook swings are both looking at 4-hour, 1 hour, and 15-minute charts, comparing the technical indicators levels and trying to catch them when it's showing the beginnings of, you know, a swing, like a 1 to 9 day bullish trend. So that's what we're looking at. And PHIO is one of those oversold low float biotech tickers here, pharma biotech tickers that lately when they get hot, they get hot. Simultaneously, pretty much everything that matters is bullish. The TTM trend is not bullish because the official time that TTM trend shifts bullish is when there's 2 blue arrows in a row up here. So it was kind of bullish there, but there's 2 red ones there, kind of. So it's kind of saying bearish, and then now we're all over the place. So it's trying to decide, as far as the TTM trend is concerned, it's trying to decide when the trend is going to start here. But everything else is suggesting that, you know what, this trend is probably going to start this week. And I entered PHIO off the scanner specifically because there's some really big moves going on in the pharma biotech area right now, and especially if they're oversold. You know, especially if there was increase in accumulation distribution during the downtrend, which, you know, there was, right? That correlates with that. That correlates with that. So those 2 things have me going. And you can also do things like check FinViz and see what the institutional holds are and see what the insider holds are. And if it's highly institutional held or highly insider held, or maybe it has a high short float, something like that, that would give it some popping power if and when that time comes. So I really like PHIO. I'm in it. And with all the technicals all the way in the bullish section or neutral, I have it listed as a strong bullish in my opinion. AUTL, talk about the knife catcher scanner. The knife catcher scanner has been on these things this week. It's the ones that tank. And then after they tank, they're showing the aggressive buying signals, like an aggressive reversal signal. And this week, I can't remember if it was 7 or 8 that it picked all together, and 6 or 7, all but one went 10% or more. The one that didn't was iBio. People in the Discord group would say that's because iBio has a history and a reputation, and I'll leave it at that. But whatever the reason was, iBio didn't do it. So it's not like the scanner is perfect, but it was really good last week, and it's catching shorter term stuff. The knife catcher is not looking at 4 hours at all. There is no 4-hour technical indicator that goes into the knife catcher scanner. It's maybe like a very little bit 1 hour, heavy on the 15-minute and heavy on the 5. So it's looking for an entry really close to the bottom when the aggressive buying is starting to come back. And it's seeing that right now. I mean, you can see like the Williams is neutral. I have it listed as neutral because it's just under -50, but it's starting to spike. And when that Williams clears -50, that's the general like bullish confirmation. Meanwhile, if 179 holds and this MACD continues into a bullish spread, we've got ourselves a great bottom. If and when I do play this on Monday is when I'm going to, unless something happens before I wake up, that when I wake up, it makes me go, never mind. But if I can get in this, the right price, I'm looking for 10 to 15%. I'm going to start scaling out as a day trade. I don't usually put day trades on this. I meant to make this a day plus. Usually I would make the trade timing a day plus because it is going to be a day trade. But if by the end of the day, I'm not up that 10%, and I still have the Williams over -50, and I still have TTM trend blue maybe, and all the technicals are showing a little bit of continuation, then I'll probably swing it. So I need to change that trade timing to day plus. So it's probably a day trade. Anyone who makes the entry needs to tell themselves, hey, I might be doing a day trade here. And then, ideally, if it ends the day strong, I would personally try to swing it. So technicals are mostly bullish or neutral. The neutral ones are shifting bullish fastly. And the determining factor for me, labeling this as a strong bull instead of a just bullish, is that scanner. The scanner was so hot this week, that knife catcher scanner, that I turned on my own on the website. When you have a subscription to the scanner, you can turn on through a toggle, or you can email me to get it to text your phone when something hits. I toggled my knife catcher on. I'm going to get the text from that, and I am going to buy every single knife catcher that I notice hit this week. So heads up, if you're in the alert group, be ready for that. I'm going to be buying the knife catchers. All right. BIOL. This one was almost not on the newsletter. It almost didn't make it. The reason I put it there is because it's history. When it does go, it goes big. And we are in this period when these oversold biotech tickers are starting to get really, really strong, especially if there's PR or volume or anything like that. But I have a delay on it because the technicals are not all there. The ones that are there are the pre-bullish. So like this accumulation distribution here, right there, that's kind of signaling that there's some organized buying, right? Like it's kind of growing. I would say that Friday bar, the reason I put it as bullish is that's the Friday bar. So Friday plus that, and that's Thursday and then Wednesday. So technically 1, 2, 3 days of growing relative volume. So there's organized buying going on. It's really hard for retail to make this signal. But if retail could do it, that's the best retail could do. So this one's kind of interesting because it's not huge, but it is increases. And, I don't know, most of the time, 99.9% of the time, you see 3 consecutive days of increase in relative volume. That's organized, big pocketed buying. And that's not retail traders. That's subjectively here, but that's funds, investment clubs, institutions of all sorts, really, investment banks, those kinds of guys. So that one's kind of confusing, but I put it in bullish. And then accumulation distribution, you can see it as it rose here. A, on the dip it rose, and then B, flat still up. Market makers are pretty interested in buying, kind of dipped there and they bought. They might have sold that, because they're market makers, but they seem to be interested. And then right here, this last bit, it dips and market makers are buying again. So it feels to me, the story being told by accumulation distribution is that market makers believe that this is going to go soon. And every time it dips, they're just trying to load their coffers a little bit more, because their objective and legal job is, if all of a sudden there's a ton of buying interest and very little supply, their job is to provide that supply, and they need to be ready. So that's what I think is going on. And the delay, for me, a delay doesn't mean that I'm going to go in. If I'm delayed because if the technicals go worse, I'll just avoid it, right? So if you're in the alert group, you'll know if I enter this. But boy, when this goes BIOL, when it goes really big. So I really want to be ahead of it. HAPP, we're going to talk about that one. HAP. I normally wouldn't put a chart like this on the newsletter, but just to the left of the page here, just to the left of this picture is the reverse split. So the chart isn't quite displaying accurate weighted moving average, but at the same time, you can actually start to use that weighted moving average and the other volume signals as like a sign of, are we starting to see that, traditional post reverse split pump and dump? And it is likely to be a pump and dump. Maybe it won't, maybe they all of a sudden become much more valuable. I don't know. But usually after a reverse split, the floats dropped a lot. After a long time, market makers started accumulating, retail starts getting bored, and all of a sudden it all comes together and volume hits and boom, 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 and it starts taking off. And it really looks like we started seeing that. Relative volume started going early. The signal came in. That's right there is 3 days in a row, right here. This is in correlation with price movement. So we're not sure that that's actually a institutional buy signal kind of thing. But this was organized buying going on here as was coming up on this, and then it started going. So the stair-step pattern, I'm looking for it to continue. That blue line is the weighted moving average line. That's what I'm using as support. The best situation would be get in when the price is touching that line. If I can somehow get 250, that would be awesome. When I was putting my ideal entry range in here, I was just thinking about the way my brain works. If it were to fall to 265 pre-market and it didn't feel like it was going to go further, I'd probably start entering. So, that's probably when I'd be going. But that 250 line there is going to be support for the VWAP, A, and B, that's kind of where, even if it were to fall that low, it's still in a bullish setup, especially if we see relative volume. So I'm going to be watching this. There's a good chance that I'll be playing this. The delay might not be long at all. It depends what the price action is pre-market. If volume is going crazy and it's just going up and down. Pre-market, yeah, I'm gonna jump on it. So we'll have to see. But I have a feeling if it were to play out the way it would play out, kind of in the middle of the day with this technical setup, without the weekend for people to study, it feels like it would be coming down just a little bit, maybe bounce off 260, 265 range before it jumped again. So that's what I'm looking for. All right, so I think if I do get JSPR, I'm pushing it too far into the newsletter. So if you want to subscribe to the newsletter, you can. All you have to do is use that coupon code BF Alerts. It is not case sensitive. BF Alerts will drop alerts and newsletter access down to $50 a month. My alerts go through an app called Remind, which is very quiet. If you don't like the noise that comes with Discord, Remind is the best way. But I also now have been the private alert group on Discord. All I do is I post my alert on Remind, copy and paste it to the private alert group in Discord, and they both get the same alert. So if you like noise and Discord, jump on it. You'll have to email me or let me know so I can get you in that group. Or if you sign up online, you'll get the instructions to join Remind, which is just another app that you don't listen to other people talk. If you want to respond to one of my alerts and you reply, it goes just to me and it initiates a one-on-one discussion. Which is much before I joined Discord. It's nice and quiet. It doesn't take over your whole day. Discord, if you're on Discord and you're in the trading floor, literally that's a time sucker. I can spend every minute of every day in that if I wanted to, and I never sleep again. So I understand if you like Remind more, but I'm on both. All right, guys, this is gonna be a fun week. I'm looking forward to it a lot. And keep an eye on those scanners, especially that knife catcher scanner. I can show it to you real quick, the knife catcher. Let's see here, scanners, access your scanners. This knife catcher, where are we going? Where are we going? Bottom fisher, private reserves, knife catcher. Yeah, so it caught Carvana. iBio was the rough one. ENSC it caught. EIGR it caught. Design, it showed up twice, and I couldn't tell if it moved much at all, if it was just a second technical signal, but design showed up twice, and when it shows up the second time, it moves up in the scanner, and it doesn't list it twice. At least it shouldn't list it twice. So this is the most recent hit on design. RLMD, I felt like when I looked at it, it was too late. This is the second time RLMD hit. RLMD hit, I want to say in the 250s or 240s. I don't know how far it went, but it hit about 2 hours before that, and then it hit towards midday too. And then that AUTL that you saw on the newsletter, that's why it hit, and it hasn't gone yet. So yeah, I'm just following where the strength is, and the knife catcher's been so hot lately that I can't help myself. All right, guys, I look forward to seeing you next week or on Discord, or Marissa will see you on Stock Tweets, whatever it is. Thank you, everybody.